there's a few principles, right? And this doesn't just apply to businesses, it applies to any investment, which is, what is a buyer looking for? They're looking for future profit. So if you're looking to buy real estate, you're looking for future profit from passive income. You're looking for, capital gain. Buyers are looking for safe, guaranteed, sustainable profits. So if you've got a business and you're running a business and you're listening to this, then think like a buyer.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show to help you unlock your full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and live by design. Subscribe now and join me and get invested in the life you really want. Let's get started. Hi, freedom fighters. Do you own a business? Or perhaps you're thinking about starting a business. If you're an ambitious career-minded investor, why wouldn't you consider building your own business? And if you're a true investor, why wouldn't you apply the key principles of investment to building a business that others want to buy? For those of you who've been listening to me on Get Invested here for a while, you know that I spent the first half of my career as an ambitious architect, working 7 days a week, 12 to 14 hours a day for years on end, as I travelled the world as a regional director of an international design firm, managing design practices and enjoying lead project architect roles on great tourism projects like Ullaru's Ayers Rock Resort in Central Australia and tourism projects right across Asia. Now, on the outside, I looked like I was living the Australian dream, but on the inside, I was dying on the vine. I was like a dead man sleepwalking. I had no time for anything but work as I tried to pay for all the things that my family and I felt that we deserved. I was stuck in this endless cycle of work and struggle. I felt totally trapped on the treadmill. And unfortunately, I ended up burnt out, broken, and broke. I lost my marriage, my wealth, and my self-worth. It was a massive wake-up call. At the age of 33, I was forced to start again with nothing to my name. And I couldn't believe that I ended up there. I was determined to have a good look at myself, make the necessary changes, and do things differently from that time moving forward in order to avoid ending up in that ground zero position ever again. I read everything that I could get my hands on, and that's when I stumbled on Robert Kiyosaki of Rich Dad Poor Dad fame, when a mate of mine dragged me along quite reluctantly to a live conference he was holding in Adelaide back in the late 1990s. This became what I now affectionately refer to as my light bulb Kiyosaki moment, when he said that the moment you make passive income a part of your life will change forever. They were very prophetic words and became my mantra because overnight, and from that moment on, I saw the world completely differently. I became what I now refer to as passive aggressive. Everything I invested my time, energy, and money in from that time forward, whether professionally or personally, was about being aggressive about creating passive income. And everything had to tick 3 key boxes. It had to create passive residual income, it had to grow in value, and it had to be scalable and saleable. Now, this is a pretty obvious approach when you're looking to invest in shares, equities, and property. And it's also why I don't believe speculative things like crypto class as an investment at all, because they don't pass the residual income sniff test and they're more of a gamble. But what about business? If you're good at what you do and you're serious about growing your income and your investment potential, why wouldn't you consider shifting away from the limitations of trading your time for money to earn a safe pay packet earning and working for someone else by investing in yourself and backing yourself by having your own business? Now, I'm not talking about any business here. I'm not talking about trading your job, which is often referred to as just over broke, for another more stressful job by working for yourself. I'm talking about investing in a business that also satisfies the 3 passive aggressive fundamentals. It must be a business that creates passive residual income that doesn't rely on you to generate it. It must grow in value and it must be saleable. Now, my architectural practice didn't tick these 3 boxes because it didn't create residual income, as your income was only as good as the next project commission you earned, and it's very difficult to sell when the goodwill value revolves all around you. And this is unfortunately the case for many businesses, unless you set them up from the outset or transform them with the right model. It's why my life partner and partner in all things, Sonia, and I started a property management business and a finance broking business. Not only do they complement our growing skill and expertise in property, and were actually fundamental to our personal investment success, but each of these businesses created residual income. They grow in value as the number of properties or loans increases, and the rent roll and the loan trail book are both saleable. These business models both tick the 3 passive-aggressive principles. So what about you? Are you tired of trading your time for money and making someone else wealthy at your expense? Or perhaps you've started your own business and you're still struggling because you've simply traded your regular pay packet for the hit and miss one-off uncertainty of inconsistent pay for product or pay for performance services. So how can you transition from treating your career or business as a just over broke job time suck into investing in yourself with a right model where your business becomes your best investment and satisfies the passive-aggressive principles by helping you to build a business that others want to buy? Well, that's where today's very special guest, Kobi Simmat, comes to your rescue. On the strength of his own tried and trusted success in building and selling his own business for over $20 million, as well as mentoring many others to do the same as a leading business coach since, Kobi has just released his great book, How to Build a Business Others Want to Buy, which encapsulates all of these learnings, tips and tricks that you can now take advantage of. So if you're serious about treating your career and work as your best and most fulfilling investment that has the potential to better fuel all of your investment endeavors, then you're going to love this deep dive chat with Kobi Simmat. So welcome, and let's get invested, Kobi.
Thanks for having me, mate. It's great to be here.
Mate, really looking to dive in. I really enjoyed speed reading your book. There's some great gold amongst it. Before we sort of delve into that in some detail later on, I'd love for you to just share what you do differently, and more importantly, Kobi, why do you do what you do?
Yeah, look, I guess ironically, what I do differently is not all that different, which is to just be focused on who I'm trying to help at the time. So, I live by this kind of saying from Steve Jobs, which is, what incredible benefit can we give the customer? It's what incredible benefit can I give, the person right in front of me, at the time. So, just being totally customer centric. And I think that, why I do it is because, I love helping people. I love, seeing people succeed. And there's nothing better than kind of getting a small kick out of, I actually help that person succeed. That's how I get my kicks. And that's why I get out of bed and do what I do every day. Whether it's, beavering away in the basement and spending 18 months writing a book, or being very public, on, doing things like this, or, getting on a stage and speaking. But it's really about, how can I give people value? How can we unblock a bottleneck in their thinking, their mindset, their investments, whatever they're doing at the time, their business. It came from a place where I used to give away unsolicited advice. I'm probably a little bit more self-aware now, which is great. But, I think that now that I've got some runs on the board, and although I still think I'm young, I'm approaching the big 50. I think that I've been able to prove it, and I think we can get stuck into it. So I really love doing it. I do a lot for free, as a lot of us do. So that's what I love about doing. I just love helping people, particularly in business.
Yeah, and I love it, mate. Well, I'd love for you to sort of wind back the clock a bit, if you can, and sort of take us through a bit of a Reader's Digest of your life journey so far, and take us through what you've invested your time, energy, and money in over the years, and why, and how has this actually led you to where you are and what you're doing today? Yeah,
look, for anyone that gets their hands on a copy of the book, I'll give you the short story. In my mid-teens, I found myself homeless. In the recession we had to have, my family lost everything. My dad managed to avoid bankruptcy by the skin of his teeth, but he was a professional architect, as you were, and the construction industry completely imploded on itself. As a late teenager, I was a victim of that. Where we literally were given 4 days to move out of our house. We literally picked up worldly possessions from 20 years of living and building this house and moved it across the boundary into the neighbour's carport. And I think that from that point on, I've lived in a family where my father's been self-employed. So I didn't have a parent where I could, copy my parent going to work every day to a job. just over broke. I had a father that was self-employed. He didn't really know what else to do, so he just kept being self-employed. Even after that, continued to persist. So I followed in his entrepreneurial footsteps, if you like, because that was the example that was set for me. But I've lived with this fear of history repeating itself. And so my quest from that day has really been, why did it happen? How did it happen? And how can I prevent it happening? And I guess as a consequence, I kind of, overcompensated for that, and really saying, particularly with this failure, because I'd seen it. And although the failure is bad, it's not that bad, does give you a chance to reset. And I think that we're probably the feeling of being scared of the situation is worse than the actual situation when you're in it in the moment. Because our family's super tight, we're super close. We managed to get through it together as a team. And I'm the oldest of 3 kids, and I think that although yes, we all wear in the family the emotional scars in different ways of that situation, it did bind us together. And we had a bumpy road, but we managed to pull through it, and we're super tight as a consequence. So I think that I didn't have a choice, really, or an example set for me. And so I got into business, and I got into really business that was related to productivity, efficiency, improvement, to building that, one of the businesses I built and sold, it had an independent valuation of over $20 million. I had potential buyers crawling all over me for a number of years. And so we got it valued, and that gave us a kind of a point to work towards, and then some key things to work on. If it didn't sell to the people that, bought that particular business, we're going to sell to somebody else. In fact, I had 3 different groups of buyers all at the same time doing due diligence. So that's a kind of accelerated version of events. I still live by this quest, and if I can, and it's not to discriminate with anybody, but if I can help one, 15 to 18-year-old boy, not have the same experience that I had, and that goes for their little sisters and brothers and that kind of stuff. But it was super stressful, right at the time that I was trying to finish high school, and all those parts of life when you're kind of 15 to kind of 20, you're trying to figure out your way in the world, and it's even harder if you started homeless. So I think that that continues to propel me on that quest, and there's all the emotional issues on the family and friends and relationships and boyfriends and girlfriends and all those kinds of things that come with that, and eventually down the track, wives and life partners and spouses, if it's damaging, and that's not to say that's the reason why I do it, but it's certainly, if I can help one person avoid it, that would be great. If it's hundreds, that's even better.
Yeah, awesome. I'd like to sort of jump into a couple of things you mentioned there, because you mentioned that it was quite fear-driven early on. I'd love for you to sort of talk us through your changing relationship with money that occurred around that time. What were the learnings that you took from the experience that you did differently in the way you then went on to grow a very successful, profitable, and sellable business?
Yeah, look, right before it all happened, you'd look at my dad and say he was super successful. We had a waterfront house. I got my boat license when I was, the day I turned 16, and I restored an old ski boat, and I had we would go water skiing every afternoon after school, and my friends are walk over broken glass to get to my house on the weekends, for parties, and at 18 years old, you're having these great parties, and for a teenage, heterosexual teenage boy with girls crawling all over me, and in a ski boat and all that kind of stuff. I didn't get my car license until later on, because everyone was coming to me. But when you get a taste of that, millionaires row we were living in. And my dad was the local architect for all of those beautiful houses that were all along beside us, all waterfront places on the lower Hawkesbury River. It was amazing, beautiful restaurants, and, long lunches, and, swimming pools by the water, and all that kind of stuff, international holidays, all those sorts of things. And so when that's taken away, and you kind of look at it and you go, well, it's a very, mindset conscious person down the track to say, that, oh, well, you don't need that or whatever. But when it gets taken away like that, it sucks. And so, it was fear driven. It's like, well, if I build this back up again, will I lose it again? I'm going to put all this effort in because I want that. And I know it takes work and it takes work. It doesn't just give it to you. It's like, if I put all that work in again, which is a lot of work and I'm prepared to do the work, I'm scared I'm going to lose it again. That's more than like, it's like a lot of people are like, oh, I'm not doing that. That's a lot of hard work, but I know I'm committed to the work. It's scary, and so, okay, I need to be, it's not risk adverse, risk aware, which is I'm constantly scanning. And so you don't get any sleep because you're constantly looking for where's the thing going to come from that's going to take it away. Because what took it away from us was the recession we had to have, and the bank took the house away. We could afford the mortgage. The bank took the house away. They made a corporate policy decision that we didn't fit in the criteria. They took the house. It wasn't that my dad wasn't paying the mortgage.
Yeah.
We just didn't fit the criteria. And so, at a time when interest rates were 17%, I always have a chuckle, when the Reserve Bank puts the rates up to 2%, then 3%, but, it was, you're talking about, up to almost 20% of the value of your property every year in your mortgage repayments, So yeah, that's kind of the fear-driven thing was like, I'm happy to put this effort in, but I do not want it taken away again. I'm not going to lose it a second time. And that's why I was worried about history repeating itself.
Yeah, well, a bit like the sort of 3 passive-aggressive principles that I took away from my own car crash in my early 30s. Were there any key principles that you took away in relation to money and investment that you then carried on into both your business and career journey as well as your personal investments? Can you perhaps talk us through some of that?
Yeah, look, I think that I think that what I did take away was that all income needs some kind of work, some kind of level of consciousness, and we're seeking for more passive than what we currently have, if that makes sense. So I really love the idea of passive income, and there's a great, there's a whole bunch of mindset changes that come with that and all that sort of stuff, which we'll get to. But I think that definitely, the project-based nature of work, I think the all eggs in one basket, avoid that. And I think that fundamentally the problem we experienced was it wasn't we were doing successful work. It was more related to due diligence, which was our customers didn't pay us. So we kind of landed in the perfect storm of customers of that architectural practice didn't pay because they couldn't, because of the recession we had to have. That was the knock-on effect. And I think that in the current economic climate right now, you still need to look at, although you might be earning passive income, you still got to look at your tenant or whomever's ability to pay. Because while you might set yourself up with this glorious passive income, the house of cards can come crumbling down pretty quickly if what happens for them dries up. And the case in point I'll give you is COVID. If your passive income was commercial real estate with cafes and restaurants through the COVID period, your income would have dried up. And while you may still call those cafe business owners to account for owing you the rent they didn't pay because you gave them some time off during COVID, you got little to no chance of getting it out of them because they run on the smell of an oily rat. So the lesson, it's quite a complex lesson, obviously, I appreciate that. But the one thing I think more than anything about real estate specifically in Australia is that it's no one's making any more dirt. That famous country music song at the moment, buy dirt. So I think that I learned the lesson, if you buy dirt, the dirt's still going to be there. And that, there's obviously different business cases. And so when you're doing your due diligence on your passive income, look at the business case and look at the sustainability of the business or tenant or occupant of that premises. Or it's capital value, for example, something that's going to get rezoned, so it's going to change uses, or it's getting if you're talking about a piece of residential, the density's increasing, so the height's increasing, so you're going to make value out of something. And I'll quote, old mate Meriton, he's making value out of the sky. He's got the dirt and then the value gets layered on top. And so I think that the other lesson I learnt was to, how can you look ahead and create value? Where is there going to be value in the future with some, changes to rules, regulations, whatever that might be. And the business that I grew really came out of a deregulation of a particular marketplace. I wasn't in the right place at the right time. I literally did the research and went, actually, I can go into this business. You mean to say I've got a customer that's going to pay me to do the same thing every year for the next however long? And if I just keep that customer happy, which I am good at, then I just keep adding more customers and my business will grow. All right, I'll get into that business. As much as it wasn't very sexy, we just kept adding customers. And in the end, we had average client retention of 7.4 years, average, because we just hadn't been around long enough to have an average of 10 years, or 20 years. So, at the 15-year mark, we had average client retention of 7.4 years because we just started to onboard more and more customers, and a lot of the customers were kind of at 2 years and 3 years.
I love it though, because I've always said, Kobi, that sustainable success in anything isn't sexy. In fact, if it's sexy, then you're probably doing something wrong. And if it's as boring as bat poo and is about as exciting as watching grass grow, then and you're just doing the same old bit by bit and growing things exponentially, you're going to end up in a much better place than the thrill ride. If it's a roller coaster, it's a roller coaster for a reason, because it's probably filled with risk. And if you are getting the stress levels and the excitement levels up, then there's probably something fundamentally wrong with it, and it's going to crash at some point. But I'd love for you to sort of talk us through the nitty-gritties of your investment journey, both across, because I know you've been very avid in the property sphere, but also in the business sphere, because they often go hand in hand. One fuels the other as you grow. Can you talk us through the highs and lows of that journey into the business arena and building that really successful, saleable business, and at what point along those journeys where you're investing in property and other things that we're building your overall position?
Yeah, look, I think my wife and I, or she was my fiance at the time, we bought our first piece of real estate when we were 25 years old, and it was on the outskirts of Sydney. It was 6,600 square meters. And it was every other block of land next to it was 850 square meters.
Wow.
And it had some warts on it, in terms of it had some constraints and, slope. It was steep land, it hadn't been developed because you couldn't build a project home on it. And so, I knew I needed to get into real estate.
Why? Why did you know you needed to get into real estate?
Well, my dad's an architect, and I had no choice, right? So, I kind of, I've lived in a family where real estate has been the conversation. It's probably the second word I learnt, after mortgage. But my father's an architect. When he's, back in the 80s and then the early 90s, he was an architect with a builder's license. When you studied architecture then at New South Wales University, you came out with a builder's license.
Yeah.
He had a builder's license. He did do building work, lots in the 80s and then less so in the 90s. I did the last project with him where we used his builder's license before I kind of started, in business myself. And so it kind of just was like, when are we buying a block of land? And we knew how to do development applications. We knew how to build. It didn't make any sense to buy something, although it is cheaper to buy a project home. It's I think arguably one of the better ways to develop, vacant land. Anyway, that's a side conversation. And so, my wife and I wanted to move out together, and we didn't want to live in a unit. And so we just kind of shopped around the outskirts of Sydney, and our friends were kind of moving into that area as well. And we found, my wife found this tiny little ad in a local newspaper. It wasn't even on there was no real estate websites then. It was just a newspaper, tiny little vacant land ad, $200,000. And we were like, oh, that fits in our price range. We could own or build our own house. We still kind of living at home in amongst, between her parents and my parents. So we can figure something out. We could probably build a house on the weekends and do that. So we buy this block of land that's 6,000 square meters, 6,600 square meters. And I think that would have been about 99,
Yep.
98, 1998, 1999, something like that.
Yep.
And long story short, we just went on this 12-month journey trying to get a development consent. We got it in the end, and we sold the land with the development consent for one dwelling with the potential for subdivision. And we bought it for 200 and we sold it for 400. Now, what's interesting about that, and this is where anyone listening, is my wife and I put in $25,000 each. So we put in 50,000 and we sold it for 400,000. We borrowed 150,000. So anyone listening, do the maths. We got, so once we get our deposit back and we pay back the mortgage at 150 grand, we turned 50,000 into 200,000, if you're following my numbers.
Yeah.
Now, let's just ignore the holding cost interest for the minute, just to do the really basic numbers, because it was a little bit, there might have been 20, 30 grand in interest payments over the time.
Tax deductible, though. Yep.
It is tax deductible, but you take that out of the equation and you just say, and I think we held onto that land for maybe 5 years. So we turned 50 into 200 over 5 years, capital gain. So, we can talk about the different tax rates and all that kind of stuff, but the reality is if you can do something and you turn 50 into 200. So, I think from us in terms of our investment journey, that before we sold it, we bought other things. We bought a 2-bedroom apartment, which we moved into because the DA was taking too long. And then all of a sudden we got 2 properties and we got a vacant block of land with no rental income. And we've got, this 2-bedroom unit with, at the time it was a big mortgage at $400,000.
Yeah.
But was, getting some traction in our professional career. So I think that, unfortunately or fortunately, we didn't get a choice to have discretionary spend on anything because I was keeping us poor. And so that accelerated our journey. So when we came to the realization that actually we shouldn't be going out to dinner and buying expensive clothes and all that kind of stuff when we could eventually afford it, we knew that actually, no, we need to keep going. And then we bought a house to start a family and that sort of stuff. And so I think that we kind of stumbled across the learning experience that people have maybe in their later 40s and 50s when they go, oh, actually, so we just didn't have the luxury of luxury, and I think that's the trap that a lot of 25 to 30-year-olds fall into, is that they start earning a bit of income. They may be living at home, move out, rent somewhere, but they start this luxury lifestyle, and as a consequence, you've then got to give things up to be able to make these investments. And I think the fluke, if there was any luck, and I don't believe in luck, you make your own luck. But if there was a skerrick of it, it was the fact that I accidentally kept us poor for a long time, put a lot of strain on our relationship. But as a consequence, that accelerated us, and we've made all our money out of real estate. We have a great real estate portfolio now, and in actual fact, I worry less about the passive income. I worry more about the capital appreciation, and so I look for things that I like. And I happen to like things that lots of other people like. And so I look for things that I like that are cheap on the speculative increase in their value over time.
Yeah, brilliant. I was going to ask you about your investment strategy, and you pretty much summed it up there. Has your investment strategy evolved and changed over time? What was it like when you started, and where is it now, and why has it been a change?
Look, I think that there's been a change because although I don't necessarily have the appetite to go into other asset classes or investment classes like shares and that kind of stuff, I do listen, and I say, okay, well, you're standing there, arguing blue in the face that I should be all in shares, and you go to, you sit at a dinner party or you go to a conference or whatever. And I was like, okay, well, I'm open to listen. I'm not going to say I'm going to do it right now, but pitch me on the idea. And I think that the one thing I've learnt from people that invest heavily in shares, for example, and I'm not saying there's anything wrong with it, I don't, is that they talk about diversification. It's like, well, why do you need to diversify? So, well, some of them don't turn out, some of them disappear. Some of them don't exist down the track, and a company that we have a lot of shares in had a shareholder meeting last week and resolved to sell to a private firm. And so even though we wanted to stay invested with those shares in that company, we're getting all our money back next week or in the next couple of weeks because it's been privatized, taken off the stock exchange, delisted and sold to a private buyer. And you get little to no choice. So with real estate, you get to choose. And so diversification has changed my strategy. And so although now we've got some other investments, they're still in real estate, but we're involved now in lending. So we have a part of our portfolio is actually in lending.
Yep.
And we lend to specific types of real estate developments where value is being made out of nothing. There's a little bit of risk involved in that, but there's some parameters around how that goes. And we look at speculative valuation of the site before and after, so it's before and after master plan, before and after development, before and after development consent, before and after commencement, and then obviously before and after, pre-sales. And so, we're supporting, somebody who wants to kind of do the hard yards and manage those projects. And that's a small part of our investment portfolio now. So although you'd argue that it's not strictly real estate, we're still investing in real estate. And I know that project process and timeline very well. And so I know where the risks are and I can watch those projects and look at those investments. And if the project tips over, we own the land. So we're taking we're issuing first and second mortgages on those sites. So it's kind of, if they don't get it right, well, it'll be ours,
Yeah, I love it. And with your passion for due diligence, having sort of Google stalked you a little bit, applying exactly the same approach in the property sphere would de-risk the exercise to a fair degree. Are there any of the sort of key investment principles that you've applied in the property side that equally apply in the business that you've built and the advice that you give to others in building their businesses? Yeah,
look, I think you've got to look at basic human needs. The best things to invest in are basic human everyday needs. We all need a roof over our head. Some of us like to have a nicer house than others. Some of us, and so people will fight for that and work for that. And so, one of my next door neighbour's family made their money out of baby milk powder. You can either breastfeed or you can't, and if you can't, it's powdered. And so, boring business, Groundhog Day. I've got another very good friend of mine makes yogurt, he said, the great thing about my product is people eat it, but at the same time he gets depressed because he's doing the same thing every day. He says, I just make yogurt every day. I buy the best milk that money can buy. I make it into yogurt. I put it in containers. It goes out the door and I've got to do it all again tomorrow. And he said it, and there's nothing sexy about it. So, but my investment principle is really about, the technical term is Maslow's hierarchy of needs. And so, I'm not interested in investing in watches or any of that kind of stuff because it's fickle, but people need food. So food businesses, they need real estate, they need houses, they need transport, they need infrastructure. And so the more essential the human need is, potentially, it's more commoditized, potentially there's a lot more competition, but there is little gold nuggets in amongst that. And so, in terms of, investing in those kinds of things, that's what I look at. I just want to touch on a little case study because, when I listen to people talking, it's kind of, they're kind of like, they're billionaires and like, oh, that's unachievable. I want to tell a quick little story about a fellow that's been working for me for 10 years. And so he's just turned 30. He, on Saturday, sold a duplex for $970,000. So he's hustled. He's bought himself a rental property. It was a corner block.
Yep.
He's gone and found a town planner who's helped him do a development application to subdivide it.
Yep.
He's basically put a separate access and he's built an attached house next to that. So then he went to Project Home Company. They built him a house for a couple of $100,000.
Yeah.
And so I think he might have paid $250,000 for this rundown rental property, corner block. He's project managed, reached out to people, made the phone calls. So, his career is, in business, is a project manager, and he's kind of gone during the night and on the weekends. I'm going to project manage this little application. I'm going to write the things that need to be written, talk to the people, and he's kind of cash floated out of his salary. And so, he would be on $120,000, $130,000 salary. And on the weekend, he managed to make himself $400,000. So this financial year, his take-home earnings before tax will be $500,000.
Yeah.
So, he could hold on to it and he could rent it out. In fact, the other half of it's rented out, and he's getting his passive income from the original place that he bought.
Yep.
But he sold off the backyard. So, can somebody who hasn't done anything at any age do that? Yes. You pick up the phone, you do a Google search, town planner, how to lodge a development application, how to do a subdivision. You can look at the market. He paid someone $5,000 to buy the fancy fluffy cushions and the blankets for the couch, and got it styled. Yep. He was complaining to me about the cost of getting it styled, but he's just broken a suburb record. Now he's 30, and there is no age, that it doesn't age discriminate whether you can do that. And he's just done it in the idle hours of the day when he would have otherwise been binging Netflix, Yeah, exactly. And he's got a less than 12-month-old baby.
Love it. I love those stories, and fantastic that you're helping him to open his eyes to those opportunities and motivating him to take the action necessary to do that, Kobi. I love that. But sort of turning back to your sphere for a second then, if you look back on your career so far, when you look across business and property and anything else you've invested your time, energy and money in, what's been both your best and your worst investment, and what have you learned from each of those?
Look, my best investment's by far been my own house, where I live, my home. And I say that because we forget to sometimes model the tax implications of what we're doing in. And so your principal place of residence, get some financial advice on this, but in my set of circumstances, the capital gain on my principal place of residence is tax-free.
Yeah.
And if I go to sell it. And so I've definitely made the net most amount of money on that, because when I go to sell it, it won't get taxed.
Yeah.
And that, in the time I've owned it, it's gone up by a factor of 4 times the purchase price. It's probably a bit more, actually. Yeah. And that's all tax-free. So I think that buying the worst house in the best street, I just want to remind everybody, buy the worst house in the best street and live in it.
Yeah.
And grit your teeth to put up with the gyprock dust and the cement dust and the tradies and do it up. Add bedrooms to it, because everybody goes onto realestate.com.au and searches 3 bedrooms plus 2 cars plus 2 bathrooms. Well, the people that are looking for 5 bedrooms or 6 bedrooms, the price category changes. So if you're renovating a house, always add a bedroom, because it puts the house in another category. It's either a cheaper house per bedroom, value per bedroom, or a better house. So if you can buy the worst house in the best street and add bedrooms to it, you will significantly increase your wealth, even if you don't need the bedrooms. And your missus says, or your partner says, but we don't need those bedrooms. If you're renovating a house, always add a bedroom. And so, and if you can do it to your principal place of residence, that's been the best investment. The worst investment, let me just quickly talk about, has definitely been the purchase of shares. I think someone talked me into buying, Insurance Group Australia shares or NRMA shares back in the day, and I put in a couple of $1,000, and I think it's worth $1,000. And so I think I know people that have made a lot of money in crypto. I think that crypto is gambling, but there are some coins in the crypto marketplace that do pass the test, and the Binance coin is one of, I don't know any others that do, because people need the Binance coin to get cheaper shares, get cheaper trading fees to trade the different crypto coins. So it's got a use case that passes the passive test, and it throws off dividends.
Yep.
So I'm not saying go buy that, but I am saying that I've also seen I've seen somebody completely lose it. Now, my worst investment, definitely those shares, because they've done nothing for me. They've paid me no dividends, and there's been no capital appreciation. And I'm glad that that was the case. And my dad taught me this lesson. He says, when the neighbor comes and bangs on your door and gives you a share trading tip, that's the day to sell. And when you hear a story about somebody who has just lost everything on crypto or shares or whatever, that's the day to buy. And so the lesson in buy and sell signals. So there is no better time than right now to buy real estate. If you can stretch yourself and grit your teeth and buy real estate right now, we are in a suppressed market. I was reading some data on the weekend that says we're still 9%, median house price was still 9% lower than we were at the end of 2022, like spring of 2022. Yep. And so I have had people work for me and say in the office, like, I'm going to stay back from the market and work out what happens. And then they got in when the market's going crazy and raging. Now, anybody listening right now, if you're on the fence, get in right now, because you've got the potential for the market recovery, which is going to be, say, 15% over the next 18 months. I can't actually think of a better investment than buying real estate right now. And yes, I'm heavy in real estate, but I'm like, this whole concept about, your passive aggressive income, I laughed at that when you said that, because I've become a tight ass. Like, I'm literally here in an old pair of, $50 Levi's jeans and a $20 shirt, because I literally putting every single cent that I possibly can. I'm trying to get more kilometers out of my car. My wife needs a new car, and it's got some creaks and groans and some issues. I'm like, we're not spending any money on anything. Life does change. Like it's I won't buy watches. I won't buy any of that kind of stuff. And I can afford to. But everyone laughs at me because, if you saw me on the weekend, I was at the local shop buying my son an ice cream, and I was in dirty jeans covered in mud with a flannelette shirt with bare feet, and my feet were all muddy. And I literally fitted right into the little village that I was in. And my wife's like, you look like such a bum. and you're probably the richest fella here by a factor of tenfold. But, if the police had driven through, they probably would have put me in the paddy wagon. And so that's kind of where it gets to. It's like, I don't have anything to prove to anybody. I don't need the fancy watches, shirts, ties, clothes, any of that kind of stuff. You need just enough so that you don't offend anybody with what you're wearing, because we don't all have attractive bodies despite what we all think. You look in the mirror. You need just enough to clothe yourself, be presentable and professional. And I think that, you want to plow every single cent you possibly can into the legacy of your surname. It's not about you, it's about the future generations.
Yeah, beautifully said. My brother works for Harvey, Kobi, and I'll never forget him telling the story when Jerry interviewed him. He rocked up to his place, and he had the arse out of his pants, old cracks in his shoes, and an old brick phone. This wasn't that long ago. An old brick phone, eating a banana, and if you saw him on the street, you'd think he was a bum.
I've worked for Jerry Harvey, and he spends more on his horses than he does on his own house. Like 30 years ago, I was a labourer, labouring for a builder, and we worked on his house. And Warren Buffett's the same. Warren Buffett drives an old town car, and he has a cheeseburger at Macca's.
Exactly, mate. It's not the cover of the book that counts; it's the contents that we're worried about. I 100% agree with you there.
Yep.
But if you were starting out again, what would you invest in differently, if anything?
If I was starting out again, I would read more business books earlier. I stopped. I did 5 years of full-time study. So I did 2 years at TAFE college and got a business diploma. And then I went straight into university and did 5 years degree, and I studied. And then I stopped, and I was like, right, that's it. I'm having a rest. I shouldn't have stopped. I think that if you can read a business book, investing book, for 30 minutes every day, you will double your income every year. And I am a completely example of that. In the times when I've been doing that, that's when I get the significant shifts. You always be learning. And so I think for if you go into a business book shop, and look, yes, I've declared a conflict of interest. I've got one for sale, but for $30, I can specifically pinpoint business books I've paid $30 for that have made me $1 million. Like, it's a direct connection.
Yeah.
Whether it's a book on marketing, or a book on how to sell and sales, or a book on relationships and professional relationships, or a book on leadership, or a book on all sorts of things. And I think that if I was starting again, I wouldn't stop learning. And I paused for about 10 years.
Yeah.
And I think that is so important. And I think at an age now where so many things are fighting for our attention, I can't sit and read a blog on my phone without drifting to Instagram, or Threads is the new app last week, and right. Or TikTok or whatever, and I'm put content out on all those platforms, but I haven't got the self-discipline, and I'm a disciplined person. Yeah. And so, I think that taking the quiet time and finding a quiet, comfortable chair that you're sitting upright and or at a dining room table or something with a pen and to face those business books, I think that that's going to help you make slow, informed decisions on things that are really meaningful. And so when you deploy, you can deploy with confidence and momentum into whatever your chosen area is. And I think that you can never be over-read. And that's what we refer to people. We say, that person's very well read. Yeah. So I think other than that, I probably would have done more in real estate than I have. And I probably would have tried to squeeze a bit more. But I have had to keep my wife happy, so there's it's not all obviously about making money. You've got to have a life as well. And my wife loves to travel, and I get anxiety when we're away overseas on holidays when I'm trying to manage projects and do things like that. And if I had my way, I'd never go on holidays. I'd never stop working. I work 7 days a week. But it's the yin and yang, mate. Yeah, exactly. The yin and yang. Yeah. So I think that obviously we've done some great overseas trips to some very poor countries, and I think that also helps you, get some check with reality that 99% of people on this planet earn less than $30,000 a year. Yeah, totally agree. Now, before we dive into your book, which I'm itching to do, can you take us through the sort of tried and tested method that you've used to buy and sell your profitable business valued at over 20 million, mate? I'd love for you to share. Yeah, look, I think the first there's a few principles, right? And this doesn't just apply to businesses; it applies to any investment, which is, what is a buyer looking for? They're looking for future profit. So if you're looking to buy real estate, you're looking for future profit from passive income. You're looking for capital gain. If you're looking to buy shares, you're looking for future profit. If you look to buy a business, so if you've got a business and you're running a business and you're listening to this, then think like a buyer. Go on a journey to maybe buy some businesses to add to your business. Then you're going to go, oh, okay, well, I wouldn't buy that one. That one's, that's rubbish. Why is it rubbish? Have you fixed that in your business? And so I think that, I can say, do these 3 things to make your business amazing. But the first thing is, have a look at some other businesses and go look, and then see what's rubbish, and then make sure that you're not throwing stones in a glass house. So buyers of anything are looking for future profit, when we're talking about investments, obviously. And that's the first thing. The second thing is the guarantee of that future profit. And if it's more guaranteed, so it's lower risk, then they're looking for that too. So if you're looking to sell a business, you want to build those things in. Now, anything that needs to be delivered verbally is love, trucks, and pixie dust. Anything that you can show on paper that can project a line, then buyers are going to be more confident. And the more sustainable you can say your business will be in the future based on, I know they say previous history and results is not an indicator of future performance, but in business, if you can look at the product or service and the market need, and you can look at 3 or 4 or 5 or 6 years of consistent level financials that are on a kind of sliding, upward scale, not bouncing around too much, then that's going to be something that when people do due diligence, they're going to look at that. Now, I had someone ask me a question last week, and I get it all the time, which is, my business got so much potential and it's this great idea, and how do I price that? I'm like, deliver it. Like, okay, if the market will tell you what it's worth. Yeah, exactly. 100%. Like, if it's just an idea and it's on a PowerPoint slide, it's not worth anything, because we're all full of ideas. Buyers are looking for safe, guaranteed, sustainable profits, and their asset they invest in is businesses, or the asset they invest in is real estate. First question out of your mouth when you're looking at an investment property to the agent will be, what's the weekly rent? Yeah. So it's, what are the weekly profits of a business? And so you've got to be able to have that narrative ready to go. Now, unfortunately, I can already hear people out there taking a deep breath and going, oh, that's so much hard work. It is hard work, but it's work that will pay you And by the way, for anyone who, is in the mid 50s plus, go talk to your accountant, but there's a potential that you won't actually be taxed on the transaction when you sell your business. There's some parameters around capital gains tax discounts, but if you're building a business, particularly if you've owned it for a number of years, it's most likely, check with your accountant, there's my disclaimer, most likely eligible for the 50% capital gains tax discount. Yep. If you're in your late 50s, early 60s, and you're looking at retirement, it's potentially eligible for 100% capital gains tax discount. And when we get back to my original, when you said what's my, my most valuable investment was my house, it's because there's no capital gains tax. And so the net amount that you get to put in the bank at the end, it's not the paper value, because you've got paper value on all of your investment properties that the bank gives you more mortgages on. That's not the real value. The real value is how much cash do you get in the bank after you pay tax? Yeah. And so I think growing and selling a business, particularly if you're approaching retirement, getting your business tidied up and trying to get that, you're potentially eligible for a tax-free transaction. That's going to net you more money to be investing in passive income.
Totally, 100%. That's where I think the paradigm needs a shift in the way people look at business and the business opportunity that sits there. Because I've always felt that my business is as much an investment as the physical assets that I've
absolutely
to.
100%.
Now, that's great, mate. So I want to sort of switch around now onto the book, and it's an awesome read. And just to start off by telling us, why did you write it? What are the key messages, and who's best suited to have a read?
Yeah, look, the decision, the why did I write it? I didn't write it actually to be published. I wrote it because I wanted an operations manual for how to get my team members, my leaders, managers, as they were turning over, onboarded much more quickly and across the philosophies and principles that we use to build really high quality culture to make our businesses great places to work at, and valuable investments. And so, it's kind of, I've done lots of videos, and then I found that if I could get people to read, they potentially absorb the information. And so I kind of wrote the book for my 27-year-old self, who was starting to onboard managers, and to consolidate all these ideas into kind of an induction manual, if you like. Now it's 365 pages or thereabouts. It's a lot, and we did scale it down. But when I'm bringing on new team members, we look at a 1-month induction. And we're trying to get all these principles, easily digested. And when you start a new job, most people say, well, in the first couple of weeks of my job, I felt like I was drinking from a fire hose, and you just can't digest that. You just can't, you'll get acid reflux, So to give somebody something they could have as a textbook, that they could carry with them for their career, that they could pick up some of the principles. We have that's an induction by videos and stuff. And so that's why it was written. And then, it's been put together by a team. It's been a great team of people that have put it together. I know my name's on the front as the author, but it really has been, a team effort. And Bernadette Schwert, who really helped polish the words, and make it something that you guys can digest. She was able to tune it into being something that people, could really digest. So if you're who's it for? If you're somebody who's thinking about starting a business, if you're somebody who is, you've got a job and should I do my side hustle? How could I do it? How can I make it successful? I don't know what's involved. If you're somebody who is kind of starting to aspire to be a leader, if you're somebody who is kind of, looking towards the next 5 to 10 years, can I sell my business? What should I be doing internally to make it something that's worth something? Those are the people it's for, and it's really how to build a business. And then the publishers said that others want to buy, so that it, is that you'll grab it off the shelf in the bookstore. It's been a great weekend actually, because hundreds of my mates have been, texting me pictures of it in the bookstores and on the shelf, and that's been really exciting to kind of have it out, to let this thing we've been working on loose,
your
but it's
baby's been christened, Kobi.
Yeah, exactly right. Yeah. So, if you want to be a better leader, if you want to understand what do I need to work on, to kind of, what should I focus on, or even not focus on, to make my business something valuable. Because look, in a nutshell, if your business is valuable and it's running really well and it's really healthy, you probably will get offered some money and you'll say, actually, that's not enough money because I can't take that money and invest in something else that'll give me a better return.
Yeah.
And so that really, people say, well, how much is my business worth? It's like, well, how much is it not worth? Like, what price is no, I wouldn't sell it for that, because that's probably what it's worth, to a buyer, versus what's it giving you. And so if the reason, and you really got to think about the reasons to sell, so I've been doing it 25 years. I really wanted to get out of it. And the best way for me to get out of that industry was really to kind of build it up, build a great team, get myself out of it, have it as an investment, and say, okay, now it's time for somebody else, to lead the charge. And so I've done everything I possibly could. And I really, started very early and very young, and now I'm having my gap year, if you like.
Yeah, so, I love that. I love that. I want to sort of dive into the subject a little bit because, as you've said, I think the book has applicability to someone who's an entrepreneur wanting to become an entrepreneur in the business. It's someone in business who's struggling, and they want to try and reshape the business so that it becomes a saleable asset, and therefore a more valuable business and a better place to actually spend your time in the process. But to sort of drill it back, what are some of the common mistakes that you, having been a business coach for quite some time now, what are the common mistakes you see business owners making?
I think the first mistake is that I've made something into a business. I'm a technician and I've made something into a business that shouldn't be a business. It could be, you've got some idea that you've started. I don't want to throw anyone under the bus. So I'm trying to think about something that, maybe you've got a craft kind of business, and you've gone, I'm going to go full on into this. And it's not an essential human need. And maybe it can, go fast or slow depending on the environmental conditions. And so I think that, is it a basic human need? And I've seen too many people try to build businesses and lose businesses that are not a basic human need. I think that if it's very radical and you can't find one like it and it's not around, you've really got to challenge, is it an alternative for something? So it's the modern evolution. Is it an old business that you're restarting because you knew how to do it, but the marketplace has evolved? I was only just thinking about my mobile phone on the weekend. Who would have thought that a mobile phone would disrupt the wallet?
Yeah.
Like the beautiful leather wallet. I've got a beautiful leather wallet that I don't carry anymore. And I was just thinking,
I've got everything in here. I've got my credit cards. This is my walking, talking wallet now, mate, because I've
exactly right.
Credit card, everything, my license, all here. That's all I need to worry about.
But I don't even have credit cards, so there's nothing. I've got my driver's license. I've got my credit cards. I've got my calendar. I've got my phone to take photos on holidays.
Yeah.
And I haven't carried cash for about 5 years, and so I haven't carried business cards because I have my own contact card that I share with people. So I'm one step further ahead of you. You've got the lovely leather phone cover. Mine's clear plastic. That's all I've got. And so I was only thinking about that yesterday.
It won't be long. They'll be injecting those into our palm, mate, and we can chuck that away, and it'll all be here. It's not
exactly right. So, so I think that if has your business or industry been disrupted, but you're trying to restart something. So back to the mistakes businesses make. I saw a business fail last year, like kind of a horrible set of circumstances. But that business was a business that was very successful and existed 30 years ago. It was brought back, restarted because it was very sexy and attractive, but then kind of fell in a heap. So I think that, it was probably, when you talk about the 6 Ps of marketing, it was probably place. It was in the wrong place. Right people, right products, right processes, right promotion, wrong place. And so you really want to start thinking about that. And thinking about the potential buyers that you're targeting, being close to those buyers, and particularly more now than ever with COVID. COVID has completely disrupted geographical boundaries, completely. Particularly with the medium that we're using right now, with say something like Zoom.
The best thing that's ever happened, I think. COVID.
Absolutely, 100%. So Zoom is a competitor for Qantas.
Yes.
And Zoom is the reason why Qantas is struggling right now, because previously I would have paid for a business flight, come and see you, we'd have a meeting, have a chat, do an interview, all that kind of stuff.
Yeah.
And so you never would have thought that Zoom would, it would never have been on the SWOT analysis at Qantas.
Yeah.
So the number one biggest mistake that I see businesses make is it's a dumb idea turned into a business. And I'm sorry if I'm upsetting people, but really test whether are you solving a problem for yourself and you think it's a great idea, or is a customer walking over, crawling over broken glass to get to you and saying, shut up and take my money? Because if customers aren't saying, shut up and take my money, then you might not have a very good business idea. And people are like, how do I grow my business? How do I get sales? It's like, well, if it's such a great idea, your customers will pay you 6 to 12 months in advance before you've even ideas off the ground. So the ultimate test of a good business idea is when the customer says, shut up and take my money.
Yeah, I love it. I love that. I really enjoyed the way you've broken the book up into your 6 M's. Can you sort of give us a brief summary of what those 6 M's are?
Yeah, look, it starts with mindset, and I think that we can all think too small, and it's talking about thinking bigger and thinking like a business owner and not thinking like a technician. If you're somebody who's constantly saying, I can't find great people, it's like we're focusing on I'm the best at what I do. Well, get out of the way. You're only the best at what you do because you've made the most mistakes. Let your team make the mistakes and let them be better than you at it. So mindset, momentum, and momentum is really important. So you can't take your foot off the gas. You got to be focused on it. I don't believe there's any such thing as a weekend. I think you just move around the different tasks that you're doing. I work 7 days a week, and I have family time, in amongst that, and that's me building wealth for our family. Money is really important, and most people that I talk to are scared of the numbers. I'm not a numbers person. I don't understand the numbers. You've got to understand what net profit margin you're making per month as a percent. You've got to understand how many dollars of profit you're making each month, and if you're losing money. So get to learn a P&L. Marketing, you've got to wave the flag, and you've got to, it's not what you know, it's not who you know, it's who knows you.
Yes.
And it's about getting known, and marketing's all about getting known. If you want a valuable business, you've got to have management, and you've got to have management systems and processes in place. And the number one thing that devalues a business is key person reliance. And so this thing, you don't buy your publicly listed shares or whatever because of a person. You buy it because of, dividends and all that kind of stuff. And it doesn't really matter who the CEO is. And maybe one CEO, the share price goes down, and maybe a new CEO, the share price goes up. But by and large, you're buying investments because of management. And so, when you go through those different M's, we've kind of broken down different things to focus on. And I think that's, really, really starting to keep it super simple. Focus on what problem you're trying to solve at the time. Maybe read a business book or whatever on the subject. And then, getting your head right, and then you can break down the other parts. So the book's kind of 2 parts. It's kind of the mindset part of part 1, and then it's all the other, bits and bobs of the latest corporate buzzword in the second part. But, you got to be focused on money. You got to be focused on marketing. You got to be focused on management, and you got to be, tying in momentum, and that'll give you those 5 M's.
Oh, I love that. Well, under the mindset part of the book, I'd love for you to tell us about the book of 50.
Yeah, look, there's a funny story. I can't remember exactly how old we were, but we were, before we lost the house, my dad was this amazing, he's this incredible architect. We built the house ourselves. And so we, kind of on the weekends would be like, right, we're working on the house, carrying bricks or gravel or doing whatever. And I got this little baby brother and sister running around behind me, and whether it's clean the house, do the assignments, the homework or whatever. And my dad would be outside, laying bricks or rendering or shifting stuff or digging. He was always digging footings or digging something, always digging, dug a hole. And so mum comes home this one afternoon, on a Saturday afternoon. She'd been out all day Saturday doing something, and she's come home and everyone's fighting and everyone's cranky. And she'd left this big long list for us to do. And, we worked through the list and everything's ticked off. And she's like, why is everyone fighting? What's up? We're all, 3 kids passed out on the couch. She's like, what's wrong with everybody? And I was like, we're hungry. And she's like, well, didn't you have lunch? And I'm like, no, it wasn't on the list. And so the book of 50 is, I'm a list person, and I have this, and I think that it's a book because it's not a to-do list. It's not an app. It's a book of 50. And it's, if you haven't got less than 50 things on your to-do list, you're not really thinking ahead. And so, there's more story to why it's called the book of 50. I wanted to go, my wife gave me an ultimatum to go overseas. I wrote a list for my team. And I said, look, if you run out of everything to do, go back to this book and do the stuff off this list. And if everything normal customer focus is done, plus everything on this list is done, I think we'll be okay. Because I was going away for 12 weeks. This 12-week trip, if you're a business owner, think about taking 12 weeks off.
I think it's a true test of a business, because if the business won't operate without you being there for 3 months, you don't actually have a business. Exactly
right. So I took 3 months off. I wrote a list. I had 50 things on it. Someone wrote book of 50 on the front. And it's had that name ever since. But it's I've got it here right now. I have these day books, and to more common ground between us is it's the concept of an architect's day book.
Yep.
And it's turned into a to-do list. So I write meeting minutes at the back. I write my to-do list at the front, and I get up at anywhere from 4 to 5 every morning, and I sit down and I plow through it, and I cross things off that I did yesterday. My mind's ticking over new things that need to be added. And honestly, if things don't end up on that list, they don't get done. And I wrote something on the list this morning. Actually, it's related to the book. We've got a list of people we need to send copies of the book out to, and I've been stalling on it. And I realized this morning it's not written in the book. And so when I'm kind of going, right, what else do I need to do? Things that I'm managing, projects I'm doing. And I wrote it in the book this morning. So now it'll get done. We've got to post these things out, get them to the post office, get them bagged up, all that sort of stuff. So I honestly live and die by the list. And many people have tried to pitch me on the idea of the latest app, the latest task, the latest Monday.com, the latest, tasks in Outlook, all that sort of stuff. But I've not seen anybody using any of those systems that's more productive than me. I will outwork anyone. And the way I do it, because it doesn't run out of batteries, is a pen and paper. And it's bound. I buy these they're not super expensive, but they're a worthy, valuable investment. They don't fall apart. So it's a proper bound Daycraft paint-lined book. It's got a lovely cover on it. Looks professional everywhere I go. It gets knocked around and it stays in reasonable condition. And I literally have probably got 100 of these now from my career.
Well, mate, there's mine right there.
There it is.
You got it exactly the same, and I started doing that as an architect, mate. So it's definitely in the system. There's no doubt about that.
Yeah. What reinforced it was I really love how architects have most architects have beautiful handwriting, and can write in an unlined book. And my dad's got beautiful handwriting, and I try, and mine's fairly reasonable. If I take the time, but I buy good quality pens. So I go to Officeworks and I try all the pens, and I'm on the Unipin fine line. I'll typically run a 0.5, 0.5, beautiful felt tip pen, and just give yourself, expression. And writing has been something that's gone through the ages, thousands and thousands of years. And it's asking your mind to actually distill the things I need to do. You put them down on the list. You might write something on a list and go, you know what, I don't feel like doing that. I'm going to procrastinate, or that's not relevant anymore. Doesn't matter. Cross it out.
Yeah.
But the hack is I write a little square box. So I start the line with a little square box, and then I write a line. And human behavior is, well, if I've got a blank box, it needs to be ticked.
Yes.
And so you kind of hack your motivation. That's exactly right. So I'm hacking my subconscious.
Yeah, I love it. And there's something tangible about putting pen on paper that imprints on the neural pathways way better than using your fingers on a keyboard.
Absolutely.
Can't explain it, but there's absolutely something in that. Kobi, I want to sort of switch now into another section of the book, and under the marketing section, you talk about why we should be aware and beware of brown cardigans. Can you sort of expand on that a bit for us?
Yeah, it's really, it's a statement about the haters are going to hate. And I think a lot of people are scared of being vulnerable on social media. That's the platform right now. They're scared. They're saying it's too much work to do social media content. particularly if you're somebody in business or an entrepreneur or that kind of stuff. It's not what you know, it's not who you know, it's who knows you.
Yeah.
Now, I think I'm pretty handsome. My wife may tell you otherwise. She must see something in me, but being a bit lighthearted about it. If you Google me, I have an enormous digital footprint from 10 years or so of really heavy duty social media. And the brown cardigans, when I started my business, there was a bunch of guys I really looked up to. And one guy used to wear, pants and braces. And I remember going to this conference at Parramatta in Sydney, it'd be 20 years ago, and he's got his thumbs under his braces and he's standing up in front of everybody, flexing these braces backwards and forwards. I was like, this is how it is, and this is how you're going to do it. And I think right at that very time, it's like, we need different government regulations so people will buy our products and services. I'm like, that's a shit reason. Like, what about just having a great product or service that gives customer an amazing benefit?
Yeah.
And, and then on top of that, he's like, oh, this kind of digital thing's not going anywhere. Now, I really, until that day, looked up to these people, and they were the brown cardigans, and they wore brown cardigans. And we're like, actually, I don't think brown cardigans are popular anymore. In fact, you've got fixed ideas that are set in your ways, and they're old school, and it's not modern. And so really, where the evolution of that idea now is, if you want to do something and deep down you're destined for more, then go follow somebody who is doing it right now and is successful. And most people, like even myself and yourself, will be more than willing to sit and have a coffee with you, or do a quick 10-minute Zoom call. Don't be too disruptive to their day, but I don't know a successful person who doesn't mentor and give free advice all of the time.
Yeah.
But be careful, the brown cardigans are the people who say they can do it, think they can do it, but they've never actually done it themselves. And so it's really about, who do you follow, who your mentors? Because I looked up to these people, I thought they were incredible, but they'd never really done it. They just got up there at the conferences and talked about it a lot. So often you will find that the super successful people that you can follow in their footsteps and get advice from are ghosts. Yeah. And so, that's really the brown cardigan story.
Love it. Another thing that I think is really worth focusing in on under the money section, you talk about creating reliable streams of recurring subscription-based income. I think that's a penny drop exercise that, again, a lot of businesses just don't get their head around the cash flowing of the business. Can you expand a bit more on that for us?
Yeah, look, you want to buy a piece of investment real estate, right? So whether it's commercial or residential, and you want your tenants to sign up for a 12 or 24-month lease. It's no different in business. Is no different. It gives you some confidence, reliable source of income. It means you can plan for and budget for some renovations and fixing things and improving things for them. And business is no different. And so there are a lot of businesses out there, and we talked obviously about the architectural practice. It's project-based, and you're only as good as your last project. There's no line to the future unless you've got clients lining up, some form of master planning 10 years in advance. And they're obviously ideal clients to have. But if you're a construction company, for example, if you're doing any sort of building work, whether you're a tradie, a contractor listening to this, really starting to think about the maintenance part of your business. Getting customers signed up and thinking about what are the maintenance requirements, and what can I be doing to look after these beautiful dwellings that I've been building or working on. If you're somebody that's thinking about going into business, you're an entrepreneur, or you're somebody who's kind of got, you're destined for something more, then think about whether you can disrupt. I'm not saying disrupt because you want to be a disruptor, but I'm saying whether you can change a business model and a business marketplace. I was successful in changing a whole industry to a subscription service where they weren't previously. They were just do and charge.
Yeah.
And they couldn't plan. And it meant that we could take a hit on our profit margin in exchange for some confidence that we would get to work with you 3 and 4 years from now. And I'm like, I'm happy to make less profit right now, but if you don't give me a commitment into the future, I'm going to ask for more money right now. I'll ask for less money if you sign up for a bit further down the track. Wow. So if you can think about, is it possible? Has anybody ever done it in your industry? Has anybody anywhere in the world ever asked for payment in a more of a recurring way? If you can do that, then what that does is that will add a multiple of 1 to the valuation of your business. So say, for example, your business gets valued at 2 times profit or 3 times profit. If you can get some kind of subscription revenue in there, that'll add a multiple to 4 times profit. And that's how you start climbing up the multiple. It's always, businesses are, although there are different valuation models, it will always end up being a multiple of profit. It might be 50% of profit annually if you're kind of project-based and you haven't got much going on. Rent rolls, accountancy practice, that kind of stuff with the recurring kind of element might be at 2 times profit, maybe 3 times profit. If you've got businesses that kind of behave more like infrastructure businesses, you might be talking at like 10, 15, 20 times profit. And that's when it gets really exciting.
Absolutely. Beautifully said. I love the fast track guide right at the end of the book. So I'd love for you to give us just a potted summary of the fast track guide on how to build a business that others want to buy.
Look, I think the first thing for you to focus on is building up your team members around you and getting yourself out of the business. You've got to stop being the technician. You've got to start behaving like a CEO, and then eventually as a chairman of a board who only touches the business monthly. That's the fast track, and you've got to do that now. And so what do you need to do tomorrow? You need to give your team members more experience making mistakes so they've got autonomy and ability to make decisions in your absence from tomorrow going forwards. So some kind of master and apprentice scheme. I think the second thing is to do whatever you need to do to make your business next month as profitable as possible. So you've got to look at your profit monthly. If you're using Xero or MYOB, there's a report called a monthly P&L or a multi-period P&L. Look at how much your business makes monthly and then work out how you can make more money. Don't be scared of the profit conversation. As entrepreneurial people, we kind of all talk revenue, and that's all very exciting. But then, no one talks about profit. We keep that very private. Start to be open about that, because that's what the valuation comes down to.
Totally.
And then this is 3 things, right? First is train people and get them skilled up as best as possible, because that's the team that's going to go with the business when you sell.
And removing yourself. Yep.
2, make as much profit as you possibly can and measure and look at your profit monthly. And number 3 is, and then do whatever you can to make your business more profitable. More sales, so maybe it's more marketing to get more leads, to get more sales, because you can see it drop straight to the bottom line. Maybe you capitalize things so they go on your balance sheet, so it drops straight to your bottom line. Maybe you cut some costs so it drops straight to your bottom line, because the more profit your business makes, the more attractive it will be. And the kind of final point is, once your business is making more than $2 million is a threshold. $2 million profit, net profit, is a threshold where things get really interesting. And someone said this, it'll get really interesting when you kind of start making $2 million profit. The buyers find you. They can sniff you out. They can sniff it out. And I don't know how, but they can sniff you out. And the minute that happens, all of a sudden you get this light tap on the shoulder. And so really, if you're super serious about this, spend next weekend with your notebook, your book of 50, and start writing things about, what does my business need to do to get me to $2 million profit? If you're making more than that, you don't even need to listen to me anyway. But if you're not, then work out what that looks like. What does your business need to look like to give that? And then just be pig-headed about actually getting to that point.
Love it. Beautifully said. I want to switch now into the old ambush fast 4, Kobi, or the bushfire lightning round, where I give you a blindfold and cigarette and ask you the quick ones. To kick that off, what's your favourite quote and why?
My favourite quote is, the service you give to others is the rent you pay for your space on this earth. And I think it's Mahatma Gandhi. That I live and die by that quote. And I think that's about karma, and what you put out to the universe, you'll get back.
Yeah, I love that. It's it's a great quote and pretty self-explanatory in its implications. Back on the literary field for a minute, apart from your great book that you've just released, what's the top book that you'd recommend we read and why?
I've spent thousands of dollars on this book. Start with Why by Simon Sinek. I think that the answer, the gold nugget in that book, is on the cover. Start with why. As you're building your team, you're building your culture, you're building your asset portfolio, whatever you're doing, why am I doing that? Like, why do I want recurring income? Well, because I want to go on holidays, or I want something for my family, or I want to stress less. I want to try and grow my hair back because I've lost it. I don't know what, but start with why. If you're sitting in a meeting, every meeting that you start with your team members, start with the purpose of the business. And ours was, We're here. We show up every day to create great places to work at, great places to buy from, and great places to invest in. My personal why is I love to partner with people on their journey to success. And so start with why. It's you can find it secondhand now. There's plenty around in the marketplace. I often buy them on, I buy them as gifts for people. I like giving away secondhand books. And so I try and find them on eBay for $5. Just about every secondhand bookstore will have copies, or you buy a brand new glossy red foil copy from Amazon or eBay for $30. You should have every single business book library should have a copy of Start With Why.
100%. It's a fundamental grab. His recent book, The Infinite Games, also a great read, because it absolutely changes your thinking about business in that context. But that's absolutely foundational, that one. Switching back to the investment arena for a minute, Kobi, what's both the worst and the best piece of investment advice that you've ever received today?
The best piece of investment advice I've ever been given is buy dirt. The worst piece of investment advice I've ever been given was buy NRMA shares.
Yeah, that's pretty self-explanatory. I want to switch now into the habit arena, because I've got a personal belief that that sustainable success lies at the center of self-health and wealth, and in the health piece, it's the rewarding rituals, the daily disciplines, and the happy habits that we employ that ultimately put us on the pathway to exponential growth. So, what's a personal happy habit that you employ that's contributed most to your success today?
Going to bed early. So I think that it's too easy to stay up late. It's too easy to kind of just squeeze a bit more out of the movie, the day, the whatever. I have the fortunate natural ability to fall asleep on the couch at about 8:30, and my wife says, "Just go to bed." And so I try to get in bed at 9 o'clock. And so that it's the hours you get before midnight that are the hours of sleep before midnight that are the most valuable. Yeah. And then I get up. I don't set an alarm clock. I've never set an alarm clock. I wake up 4:30, 5 o'clock when my body's had enough sleep. And I get my best work done before my family wakes up. And it starts with that book of 50. Yeah. I write a to-do list. I prioritize it. What's most important, get that done.
Love it. Absolutely love it. Yeah, some great thoughts there. To sort of summarise our great conversation today then, Kobi, what are your key takeaways and must-do actions for those aspiring to build a business that others want to buy?
Look, start now. It's never too late to start. And I know that we could, potentially have some people here that, your late 60s, your 70s, they're tipping that life expectancy is going to hit 150 years pretty soon. Yeah. And so you might say, well, I don't know how far I'm going to go. Well, every year that goes by, I think they're talking about life expectancy being added, 5 years being added, particularly with, modern medicine and awareness and health and what we should and shouldn't eat. Yeah. And so it's never too late to start. And I think that any business that started and starts to get some numbers on the road has got a value. And particularly for older generations, who have got businesses, you could potentially be looking at a tax-free transaction. So it is a area of investment that I think should be considered in any diversified portfolio. And I think that, I've certainly had some successes in that area, and I would encourage anybody to be doing that. There's lots of businesses out there, like big corporate giants are built on buying small businesses and putting them together and making value out of that. And so it is the feeding ground. They're big corporate giants constantly on the hunt for taking those great little businesses off your hands. And so, the big corporate giants weren't started from scratch. They've been, gobbling up little businesses all the way along. And so I think that, it's never too late to start. And if you're thinking about starting, start now. And you can start by reading. And you could read my book.
I love it. That's beautifully said. For those of us that have really resonated with your message today, Kobi, how can we find out more and get more involved with you?
Yeah, look, the first thing you do is you can see my book in any of the big bookstores and business book outlets. Should be on the shelves. It's available on Booktopia and Amazon. So Kobi Simmat. I'm on almost every platform in some way, shape, or form. My preferences at the moment is a big consumer of and user of Instagram. So lots of videos on Instagram or TikTok for those that want to maybe get some business advice on TikTok. Direct message on LinkedIn, or my email address, shan't I give it away, is kobisimmat@gmail.com.
I love it. Well, look, you've been in our green room discussion. You've been very generous in offering a bit of a challenge to the Get Invested audience. So for anyone who wants to get a free copy of Kobi's great book, just email us at hello@knowhowproperty.com.au. But I need you to answer this question, and the best answer is going to get the copy. And the question is, what's my key takeaway on how to build a business that others want to buy? So if you've been listening carefully to what the gold that Kobi shared today, that'll be very easy for you to do. Spear them in, and then I'll share them with Kobi, and then Kobi will send you a great, probably a signed copy of the book, Kobi.
Absolutely. It'll be personal signed copy with a personalized message for you to motivate you on your journey.
I love it, Kobi. It's been an awesome conversation. I feel like we've only scratched the surface, so I'm keen to keep the conversation going at some stage, but I really want to thank you again for joining me on the show today.
Thanks for having me, mate. It's been awesome.
Thanks, Kobi. Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. And don't leave yet until you've taken the next step towards living by design by getting my award-winning book, Get Invested, absolutely free when you sign up at knowhowproperty.com.au or bushymartin.com.au. And finally, make sure you subscribe to Property Hub to get your weekly dose of Get Invested inspiration, along with every episode of Realty Talk, Australia's leading property show for red-hot property investing news and insights, direct from industry leaders and influencers. Remember to always get invested in your knowledge, and I look forward to seeing you next time.